Good morning, everyone, and thank you for joining our basic tax law training session for tax year 2023. We're excited about this training. It will probably be somewhat intense, but at the same time, we want you to feel comfortable in asking questions. With me today, I have my two colleagues, Anna Mora and Kyla McGregor. Kyla is joining us from Gibbon, Nebraska, and Anna is joining us from Omaha, Nebraska, and I'm coming to you from Soresco, Ernie's, 12 country miles north of Lincoln. I always like that. Someone asked me one time, what is a country mile? And I'm like going, I don't know. It's the same mile as a city mile, but it's in the country. But anyway, with that, we want to get started today. Some quick housekeeping. Please keep your microphones muted. If you would love to show us, the image of yourself, if you want to have your camera on, that's cool too. Otherwise, what you have up is fine now. If you have questions, it might be best if you put those in chat, and then I'll be watching the chat as Anna and Kyla are tag teaming the presentation today. We will be using a PowerPoint, which you would have received the slide deck earlier this morning, as well as a scenario that Kyla has put together for us, which you also received a slide deck of that early this morning. If any of you were up at 12:40 a.m. and watching the email, that should have come in from vita@unl.edu. And then as well, we will actually be on Practice Lab, showing you where the information goes into Practice Lab. So we want to give everyone a good idea of the documents, the type of tax returns that you might see while you're participating in VITA, and then also starting to help you understand where to go into TaxSlayer to put in the documents that you'll be receiving at a site. So we'll be using the forms that you'll be using here in the next 3 weeks. So the thought is we're not going to make you experts at TaxSlayer today. That's not the purpose of this. With Practice Lab, the purpose today is to help familiarize yourself more with the basic tax law certification, and then also to give you an idea of what types of documents and tax returns that you might see when you start preparing returns here at the end of January. I will also let you know that if you see a taxpayer that has all the things that you're going to see in basic, and then if you're in with us in advance this afternoon, I don't think you will. We decided to make one taxpayer have all of these things so we weren't bouncing you around from scenario to scenario. However, I suppose someone could show up with all of these, but I highly doubt it. Watch us, I just jinxed ourselves. Everyone's going to be coming in with all of this stuff. So with that, I'm going to mute myself. I'm going to be watching chat, and I'm going to turn it over to Anna and to Kyla. Earlier, you did receive an agenda for the day, and we will be taking a break. Is it around 10:30, Kyla, Anna? I don't have it pulled up in front of me right now.
Yes, at 10:30.
At 10:30, we will be taking a 10-minute break. We're all adult learners here, so if you need to, to go refresh the coffee or you need to take a quick break, that's perfectly fine. We'll just expect you to try to keep up with us, but we will be taking a break at 10:30 regardless of where we're at in the presentation. And our goal is to be done at noon. Okay, so with that, thank you all for being here. Kyla, Anna, take us away.
Okay, well, do you want me to start, Kyla?
Okay, so I'll go ahead and start. Let me share my screen. Okay, is everyone able to see my screen okay? Okay. So, um, this is kind of what we're gonna cover for the basic, and what's in the advanced will be covered later, as Dr. Moody had stated.
We can only see your background screen.
Yep. Of your internet screen.
Yeah,
Maybe. Did I share the right
there we
screen?
go.
Okay.
Now we can
Sorry.
see.
I shared my other screen. Okay, so let me make this big so everyone can see. So this is what's going to be covered today for this morning. And then we'll get started. So today we'll be helping Julia, who is separated from her spouse. She has two children who live with her for part of the year in 2023, and she provided more than half of their support. At the beginning of the year, she was unemployed, collected unemployment benefits and disability pay. She was hired by LPS in March. Her eldest child is in college full time, and her younger child participated in a before and after school program as well as the daycare in summer. Julia has other expenses and income, which we will gather during the review of the intake form, which is the form 13614C. So we'll get started. And I know that sounds like a lot, especially if it's your first time, but it's always seems overwhelming, even if it's your first return after so many years of doing a return. So don't panic, take a breath. Remember that you are surrounded by your peers who know that can help you through the scenarios that are coming to you in person, and that you also have a very qualified site coordinator that can help you. If there's something that stumps the site coordinator, they have us, and then we also have IRS agents that can help us that we have access to. And then just remember, one documents at a time. Sometimes that seems like a very simple thing, but it is just, if you don't know what to do with one form, maybe skip that form and do another one that you are familiar with, or a little bit at a time. But yes, one document at a time. And so then just kind of organizing the documents. So as you go, or once you kind of get to the end, kind of organize it following the 1040. And this will help your quality reviewer. So this is kind of more for the end. But if you're going through it and you kind of organize them following the 1040, it'll be also easier for you, just to ensure you didn't forget something. And then the other thing I wanted to point out is keeping the I-10 letters with the numbers and the social security cards out until after the quality review, just because we'll want to have another set of eyes to look at those. Oftentimes those are where we have errors. What else? If there's any calculations that were handwritten or like done outside of the return, um, make sure they're documented, and make sure that it's easily legible for the reviewer to know what happened there. And then the big key thing is, we've noticed there's an increase in identity protection pins. So always ask the taxpayer if they had one. And then there's also a space on the intake form where they can mark yes or no. So they may have marked it already. So then at the very beginning, before we started, I had this screen shared. So this is how to access Practice Lab. So we're gonna start with Practice Lab. Let me share this one for the identity protection pin. This is where we're gonna find that question where I mentioned, where it's a yes or a no. So this can be entered at any point in time, but it needs to be entered on the return. If they don't have access to it, it has to be a paper return. So we'll get there eventually while doing our scenario. So if everyone's logged in, go ahead and log in. I can wait about a minute to see, make sure everyone's caught up. If everyone's caught up, just let me know and we can keep moving. I think there's like a little thingy where you can like react, either put a thumbs up or something.
And just as an FYI, the practice lab, it does time out after I don't know exactly how long of no use. So make sure you check it every once in a while because a screen will pop up that says that it'll log you out in 3 minutes. So make sure you keep checking every once in a while so you don't get logged out in the middle.
And then let me pull up the scenario because I didn't pull up the scenario. I'll do that while I wait.
Thank you, Ethan. So on your tab bar, wherever you have that for Zoom, there is a reactions icon. It's a smiley face. You can click on that, and then you should be able to do a thumbs up or a hand clap or the joy or the uh-oh. And then I'm gonna do the one I want the happy surprises here. But anyway, uh, just some things that we can do.
Okay. So in our scenario, we'll have the detailed basic scenario. So in order to get started in practice lab, no, so it's already letting me know, do I want to continue because I'm timing out on my session. But before we can start, we have to enter their social security number. So let's go ahead and put in what Kyla provided for us. And normally when I get my first client or I get a client, I enter their social security number and start their return before I start asking them questions. That's just my habit. You can ask them the questions and then enter their information. But I kind of talk to them as I go. So the first question is going to ask you for the filing status. So in order to get the filing status, we're going to look at these boxes. They're going to help us figure out, are they married? Are they single? Are they separated? Here it is. And I'm going to pull up the full. Sorry, I hope I'm not making anyone dizzy. Okay. Okay. So these are the boxes we're going to look at to help us figure out what is the best filing status to choose. The reason I didn't really point out this first part where they put their first and last name and maybe include a spouse if they have one is because sometimes they'll put maybe a significant other that's not necessarily a married spouse, so they're not legally married. So you're going to check down here to see what are they putting on there. And then let's say they did put a spouse, then you would ask further questions of like, how long have they been together? How long did, like, just following questions. And there is a decision-making tree that we would follow on the 4012 page B12. And this is really good in helping you figure out which one we would use. So with Julie, we would see, was she married on the last day of the year? And if we go check on our scenario, we're told that she's legally separated from her significant other. And then on our intake sheet, there's also a date of when that happened. So if we go back to the tax layer page, what would be the best status for us to choose for Julie? Anyone wants to chime in?
So using that filing status decision-making tree, were you married the last day of the year? And that would be no. They were legally separated. They
Yeah.
were not together.
Mhm.
Did your spouse die during the year? And the answer is no. And then do all of the following apply? And so you would go down and have to answer either yes or no to each one of those. Well, we know that the spouse did not die, so it's not going to be the qualifying surviving spouse. So then we go down, we answer no, and then do both of the following apply. And so in this particular case, and the reason why I'm not reading them is because I can't see them or
Oh,
I
I
can't
can
read them. No, you're fine. Anyway, so I guess the question is, raise your hand if you think we would file for single or if we would file for head of household. Well, that you can't raise both hands, right? I get that. All right. Lucila, can I pick on you this morning?
I'm sure. Can you hear me?
Yes, I can.
Okay,
So
great.
how would you hide out there? I can't even talk. How would you file Julia?
I'm thinking head of household.
Okay. All right. And why are you thinking that?
She has dependents.
Mm-hmm. And then she was not with her significant other the last day of the year, correct?
Correct.
Right. Okay. So great way to use a decision-making tree, Lucila. So the correct filing status then would be head of household. Are there questions on how we use the decision-making tree? The 4012 guide is always very helpful to have here. Anna, thank you for allowing me to jump in. I'll let you continue on.
Thank you. So then I'll just move to the next slide because the next slide kind of is helping you. Let's say you're not sure if the person or dependent they have would be a qualifying person to be head of household. They also have this chart here. And this is just to help you with the dependents. We'll get to that in the next couple of slides. So then let's
Just a quick note, if you look,
Yes.
if you saw at the bottom, it said filing status wizard,
oh yeah.
not click that ever. That just will mess up the
I think
return.
here.
Yeah, don't click that button. Make your own, use the decision tree to help you out to figure out what the filing status is, and if you can't, if there's issues and you can't figure it out, talk to your site coordinator. So don't click the filing status wizard because that just takes you down a weird rabbit hole.
Yeah, it makes it a little bit more confusing.
Anna, I have a question.
Yeah, go ahead.
Okay. I guess I thought that if you were legally separated, that you were still considered to be married.
You are considered to be married, but let me go back to the decision-making tree and I'll make it big. But they needed to have lived with each other for more than half at the end of the year.
For the last half
So
of the year.
yeah, for the last half of the year, they needed to have lived together, but it's also a legal separation. So the legal separation was done before the December 31st of 2023.
Okay, does this, I'm not seeing it. Does this flow chart talk about a legal separation somewhere?
Yes, right here. Did you or your spouse live apart the last 6 months of the year? And
Okay.
then if the answer was yes, you would then go here. So then you filed a separate return, you paid more than half. But that
I
would
see.
be to help you do if it's married filing separate or married filing joint.
Yeah, but
Because then
now
it
it,
still takes you down here. You see, it would be head of household.
uh-huh.
Because
Yeah,
this
now
one,
I see it. Okay.
yes,
Okay, thank you.
yes, sir. Was that clear? I just want to make sure it was very clear.
Yeah, I was just confused because I thought that legally they were still considered married, but I see this flow chart is looking at, did they live together?
Mhm.
Yeah,
And Becky, that's a great summary of that is the living together. And it even gets more finite with were they together the last day of the year. So this is one when you come across this, always involve your site coordinator or your quality reviewer in helping you work through the decision-making tree here.
okay.
Um,
Now, if she did
okay.
not have children, we could file her as single. But since she does have, oops, sorry, I'm giving out the answers now, aren't I, Anna? Since she does have two children, um, one of them who's under the age is 16 or under, and then she does have a college age student. So they would qualify her then for head of household as a qualifying person.
Yeah.
Right. Okay, thank you.
Yeah.
Yeah, you're
So
most welcome.
I was gonna say just to add on a little bit. So head of household, if you paid for more than half of the cost of keeping up your home, which is the second one, and then it's the main home for you and your child, stepchild, your qualifying dependent or child, then that considers you head of household. There are very rare circumstances where these do not apply and the person is head of household just because the children that they have listed aren't qualifying children or a qualifying dependent to classify them for head of household. But usually that is when the situation or circumstances are a little bit more confusing. So then we'll go ahead and enter her basic information.
So you'll ultimately get the name and the name spelling generally from the Social Security card.
Yes.
Because that's what the IRS has in their database generally, is what's on their Social Security card or their ITIN letter. Sometimes it's a little tricky when people have middle names or multiple last names on which one goes in which box. So if they have a prior year, you could check that to see how it went through, or double check with them to see which one is their first last name versus a middle name.
Yes.
To get their name entered correctly.
Yes. I always ask them if there was any errors or if there was any rejection from their previous one. Sometimes they're confused and they don't understand. Sometimes they're like, yes, I remember last year, a name was wrong or a date of birth was incorrect. If they say that, I will ask them to actually give me the physical copy of like the social security number, and then for date of birth, something that has it written down just so that we can make sure that it's correct. And then these are the boxes that you could possibly fill out, click on. So if the taxpayer is being claimed by someone else, you would click it here. If they were over the age of 18 and a full-time student, you would click here. If they were blind, deceased. And these questions, you'll look at things here on the intake form to help you select some of these. Some of these, like this one, do you wish to contribute? That's all the way at the end of, the intake sheet.
It's
And they
just-
would have answered yes or no, or you, or just your spouse. And then this is where I kind of stop. I put in their name, I ask a few questions, and then this is kind of where I start talking to them. I start overviewing what they selected, and then just kind of checking to see if they have, like, let's say they only put one, but as you're talking to them, they're like, oh yeah, I had another part-time job. So, and it's on a W-2, so then you can go in and correct it. Or maybe when they give you all your forms, because sometimes people will just give you all the forms and they're like, here, this is everything that I have. Just kind of going back and verifying that what's entered here is correct, because then when the quality reviewer comes through, you want to make sure that they're also seeing what you're seeing so nothing gets overlooked. It's a little hard to do it when it's on paper and you can't really like talk to the person, kind of more like the way it would happen in real time. So we'll keep going with the slides, but that's just kind of how I kind of do it. And everyone has a little bit difference of how they start their return and kind of how they do this step of getting some of the information.
So I think
Um,
what's important also to note, and I know we're getting more into the details here, but in that interview, if anything is marked unsure, by the time you're
Yes.
done with the return, you have to have it either yes or no. And then I always correct how many jobs did you have. A lot of times people will not put in the number of W-2s. So you'll want to make sure you put in the number of W-2s that you did with it.
Yes. So then I will go look to see if she was disabled. No. So then we can go ahead and enter an address. It'll be P.O. Box 4565. With the address, sometimes people will ask you, they might have like a physical address, they might have a mailing address. This is the address that they would use if they were to receive a letter. This is what the IRS will use to send a letter out or any kind of communication. So that's the address that they want to use. And then it does require that you put in a phone number. A lot of the times this is more for our use, and the email is also for our use. That's just in case something goes wrong. This is the number that we would give them a call, or this is the email where we would send them information, letting them know something happened with the return. So then we'll go ahead and click continue. So now we've moved on to the dependents or qualifying persons. So now we need to determine whether or not John and Anne are a dependent or a qualifying child, or one or the other.
Because occasionally we get people that'll just write
Just room.
roommates or other people that are not considered relatives or children, so we need to double check to make sure that they actually wrote a person that we do need to put as a dependent.
So then you would click yes, you would continue. So then here we can start looking at, I'll move this over at the next one. So this is the decision-making tree that we can use to help us figure out whether this person can be a qualifying dependent or not. So we can start with, let's see who it is. With John, and we'll go up here to look at John's information. So this is some of his, and then let's see what it says. It says the kids lived with Julie for 10 months of the year and she provided more than half of their support. Let's see. The older child, John, is going to college full time, and the younger child is in a before and after school program during the school year and in daycare for the summer. In the summer, he's in daycare. And I think that's everything that they give us regarding John, regarding his dependency or possible dependency. So looking at this chart, so it says, can you or your spouse be claimed as a dependent on another taxpayer's return? And this is regarding Julie. So the answer would be no. She didn't say that anyone would be claiming her, but it also says that she provided more than half of their support. And then based on her income, if we take a look at a few of the documents they've given us, it just at a very quick glance, her income is pretty high. So it would substantiate that she's able to provide for herself. So then it says, was the person married as of December 31st of the tax year? She was married. So let's say if we say yes, they are not. It says, is the person filing a joint return for this tax year? And it would be a no. And then was this person, wait, is this based on? Yes. And then was this person a US citizen, US national? The answer is yes. So we'll go to 5. And then was this person a son, daughter, stepchild? John is the son, so it would be a yes. And then was the person under the age of 19 at the end of the year and younger than you, or under the age of 24 at the end of the year for a full-time student? So if John is born in 2004, this is based on 2023, 2004, it makes him 19. And he is a full-time student. So the answer would be yes. And then, did the person live with you as a member of the household except for temporary absence? So John is in school full-time. Most likely he's living on campus. That is a temporary absence that is considered to be home for a full year. So whatever amount of time he would be in school, it's considered that he's at home. So this would be a yes. So then we'll go to 8. Did the person provide more than half of his or her own support for the year? So did John, it doesn't look like John worked, so he would not have had any income, so they could not provide for themselves. So then we would go to 9. Is the person a qualifying child of any other taxpayer? We're not told anything about the other parent, but since they lived with Julie for more than half of the year and she provided more than half of the support, that would be a qualifying child. And then, so then John would be a qualifying child. And does anyone have any questions with that?
I do want to know when we get to this last question, sometimes parents will bring in like child custody things or legal separation form sheets that say that they can do every other year,
Yes.
things like that. So we might need to double check to see if the parents aren't together, if they have any documentation like this, so we can verify that they are the correct parent for that year. Because sometimes it gets a little gets a little messy sometimes when on which parent gets to claim the child that year, and sometimes parents aren't civil with each other, so it can get a little hairy occasionally, but
Yes, I forgot to mention that. Yes, there are some times where it gets interesting with the children. That's we think we're going to talk about it later on when we talk about the earned income and that part. So then we'll go ahead and enter John's information. If this is telling you, you just want to say go ahead and review or renew. It'll automatically populate the taxpayer's last name. So if their last name is different than what the parent guardian's name is, you'll go ahead and change it. So in our example, the last name is Johnson. So we'll want to make sure that we keep an eye out for that, because we want to make sure that the name, date of birth is correct. And then every once in a while, you'll have a dependent that doesn't have a social security number or ITIN. If that happens, just go ahead and speak with your site coordinator to help you on that specific situation. Usually if that happens, it's because they're applying for an ITIN. And then this is going to ask you, was the individual U.S. citizen, U.S. national, or U.S. resident alien? If they weren't, then they can't claim the child tax credit or the credit for other dependents. So they have a social security number, so yes. And since we don't have the physical card, but like if the card said it's not valid for work purposes, then this would be a no. Or if they have an ITIN number, then this would be a no. And then we do know he is the son. This is where it's important. They did let us know that John lived with Julie for 10 months of the year. And if we notice down here, it says number of months lived in your home last year. It says 12. So sometimes this will happen. They'll put just 12, the full year. But as you start talking to them, they'll be like, oh, well, part of the time they went to live with the other parent or another scenario of such. So here we would put 10. John was a full-time student and he's over the age of 18, so we'll click here. If, for example, they have an agreement where one of the parents can claim the child and the other parent, even though they like lived with one, you would click here for the earned income purposes. This would go with the parent that the child lived with more than half of the year. Even if there's an agreement, the only thing they would be releasing would be the dependency. And then you would click here if the child or the dependent's married, if they made more income, if there's multiple support declarations. So we'll click continue. We'll add another name. This would be for what is Anne. So I'll quickly get Anne entered. Wait. And for Anne, I'm just putting in the birthday. Okay, and then the same as far as we know, she has a social security card, so it'd be yes. And it doesn't say that it's not authorized for work. She's the daughter. And then the same thing, they both lived with her for 10 months out of the year. None of these would apply, so we can go ahead and click continue. So then here, if this was a qualifying widower, this is where you would put in the information for the deceased spouse. And then this is the section where we would put in the identity protection pin. So if you catch it early on in the intake process, you can do it ahead of time. If you happen to forget, you can always click on the little hamburger and then come down here and there's a specific line under dependents that's qualifying person. And then you would begin, and maybe one of them has it, or maybe all of them have an identity protection pin. So you'll go ahead and if you enter it now, and again, the identity protection pin has to be on the return if they are issued one, because it'll reject on our end if it's e-filed and it's not included. If they, for whatever reason, don't have access to it and can't get the number, they have to mail the return. So it has to be a paper return. And then it seems like now they have a link here that helps you retrieve your IP pin. And there's a few different ways that they can retrieve it. The fastest, easiest way would be if they can go onto their ID.me account and access the letter with their IP pin. So then we can continue. With the IP pin, it doesn't always necessarily mean that the IRS sent them a letter. They may have requested one themselves because you can always request one. So we'll click continue. And then this is where we'll start looking at what income forms they have. I kind of start going based on what's here on the screen. So the first thing is entering the W-2. So let me go back to entering the W-2. And let me make this a little smaller. So when entering the W-2, we'll just read what's on there. And it's as you go, everything will match up here. So B will have employer identification number. Keep in mind that some of the W-2s do look a little bit different. And so some of the boxes will be in different areas depending on whether it's like a long one, it's one of those little vertical ones. So just keep in mind that not all W-2s will look the same. So we'll go ahead and start. If this is a corrected W-2 or it's a substitute or it's a railroad W-2, you'll click on these, but this will always be defaulted to it being a standard W-2. So we'll start, I'll zoom in a little bit again. And then I kind of just pinpointed these. So here in box 12A, there's certain codes that can be out of scope for basic. So just keep an eye out in case one of the codes is out of scope. A lot of the times if it's a actual W-2 that was sent in the mail, on the back it'll tell you what each code means. So you can look that up. If you need additional help, you can always ask your site coordinator. So we'll enter the number here. And that's this number here, the EIN number. And then it'll pull up Lincoln Public Schools. Some of them, if it's already in our system, you just have to verify, double check that the information is what's correct. A lot of the time, since we've entered a lot of these EIN numbers, the information will just pull up, so we don't really have to do much. The employee information, so it'll pull up what the address is entered on the basic information. If it's different, just go ahead and make it match what's on the W-2. And so then this is where we'll start entering what we see in the boxes. So we'll enter the first one. Oh. Maybe. And then if you'll notice 3, 4, 5, 6 will all automatically input. So if that'll happen every time. So just make sure sometimes the W-2s will have these empty, sometimes these will be different. So just go ahead and verify that the numbers are the same, and then you'll just enter the withholdings. Check to see if there's any Social Security tips. There's dependent care expenses, so we'll get that in. For boxes 12 and 13, you have to select which one it is, and then it'll let you enter the amount. There's nothing here, so we can leave that empty. And then 13 has the retirement plan.
And the two codes that are on this one, these are ones that we see a lot.
Yes.
D is 401k and DD is for health insurance. So we'll see those quite often.
Yes. And then if there's any other type of benefit that's not in box 12, it could be on here. So just keep an eye out on what they may be. You might really only see
Retirement.
I think that would be the only one, right?
Generally, yeah.
Okay. Yeah, it would be the retirement.
Unless they're from another state.
Oh yeah. And then always make sure to double check all the way down here on the state part. You'll want to add that information. And then this 16 will automatically populate. Just double check to make sure that the number is the same, and then you'll enter what's on box 17. And then if there's another state, you'll add it here. You'll click. Let me check to see. Wait. Okay. So then I'll check. This is where I'll check to see if they only had one W-2. So it says 1, and then I by default always just double check what they gave me in forms. So there's not another one. If they had given you another one, you save it and you can enter another. Did it not? Heck.
Okay, so Ethan is asking a good question. He is saying that when you typed in the 25,000, that box 6 was different than what was on the W-2.
Oh.
If that is the case, because that will also auto populate. If there's any of these that, if there's an error, then you tell the taxpayer they need to go back to the employer and have them fix or correct the W-2. Now, sometimes the tax tables will be changing, especially in the practice lab. So what comes in box 4 and 6 may not always be what's on the W-2 that's provided to you in the practice lab. So for right now, we're probably not too concerned about that. The other thing is that a lot of times you'll be having decimals. So it could be $353.72. Then you would round that up. If it was 50 cents or lower, you would round the number down. So the IRS does not work with decimal places as well.
Yeah, and if
Oh.
it's off, if it's only off like $1 or $2, I wouldn't have them go back to the employer, but if it's off more than that, I would.
Mhm. Okay, so click continue. And then the next on here is the form 1099G. But this one is only if there's state and local income taxes. So if they would have itemized, they would have received a 1099G from the state. So we wouldn't. They do have an interest form. So then we would input the interest form. So here I just kind of put out a little bit of pointers in box 4 for the state section of it. Usually they're empty. Not a lot of the times they're full. Every once in a while you'll get one that has something in these. So just always keep an eye out on these ones, but it's usually box 1 and then box 2 if there's a penalty will be filled out. So let's go ahead and start on that one. Here we'll click that it's an interest income form. So here our payer's name is Union Bank and Trust. With the interest income form, you only really need to put in the payer's name. You don't necessarily need to put in the EIN number or the TIN number. Those you can leave empty. And this is where we'd put the $40 in interest. And then there's a $10 withdrawal penalty. All the other boxes are empty, so we can leave them empty. If they had multiple interest statements, it would be the same. You can save and add another, and it'll automatically just pull up another one. We don't have another interest statement, so we can just put cancel. But we do have a dividend statement. Remember that if it has capital gains, it's out of scope for basic. But you can use the pages D18 to D19 to help you fill out the dividends. So we'll open the dividend statement here. Click continue. And it's computer share. We can leave that empty. It doesn't have to be filled out. And then And then here they had 200 in ordinary dividends, 200 in qualified dividends. And they did have capital gains, so they had 100. And I know I said that it would be out of scope for capital gains, but that would be if it's on like the 1099B, right, Kyla, where it has like the full printout of a sale of a stock or bond.
Yeah.
So this would be in scope.
All right, awesome. Let's Anna, if you would go back for me, please, to the where you did the 1099 interest statement, how you got to that.
Yeah. So we'll go back. I'll actually go all the way back so you can
That'd be
see.
great. Thank you.
So here it says Schedule B. So we'll click Add. And then on interest or dividend income, we'll enter here. And then here it'll add one or the other. And then you can select here which one of the forms you have. We have the dividend, 1099. If there was the interest, we would select the first one. And then now we can add the information. And then we put the 100.
So what we do with all these documents that presented is we're making the electronic. So like the electronic W-2, the electronic 1099 interest, 1099 dividend statement. So that's why Anna is so particular in making sure that she's looking through the boxes and then looking at the physical paper she's looking at to make sure that all the information is entered in correctly.
And the box numbers on the form that you get from the client should match up to what the box form says on this input.
Yes. And then on here, if it has a red asterisk, that's required. So the payer, this stuff here doesn't need to be filled out. It could be left blank. If all the other boxes are empty on the form, then they're empty on the input page. So we just leave everything else blank. And then we can enter another if we have another one, or we can just click continue.
Now, one of the things that I know Kyla, when we met yesterday, was disappointed and she couldn't find a brokerage fee blank statement. Sometimes your interest and dividends will come in on a brokerage statement and may not look exactly like what we're doing right here. But on the stocks and bonds, always make sure you're looking for the dividend, 1099 dividend and 1099 interest, because they'll put them in the same document bundle.
Yes. Yes,
And
and
so-
sometimes those brokerage statements are scary because it will show and it'll state 1099 and then it'll have capital gains and stuff like that. But if it's zero, you can still do it because there's nothing on there for you to report.
All right, let's take a quick breather for just a moment here. Hopefully we are all doing well with the W-2 and the 1099 interest and dividend statements. Anna, what is left on income documents that we need to add?
We have a 1099-R, the Social Security, 1099-G, miscellaneous, and W-2, and then we were going to touch on scholarship.
Wonderful. Okay. All right. Everybody doing okay? With the practice lab? And entering the documentation in?
I had a question.
Okay.
So on the practice lab, right at the top of the dashboard, it has a spot where it says like save and continue. So do we have to do that in the practice lab, or is it just as she goes along, we just go along with it?
So what I love about tax layer, and Anna and Kyla jump in, is that it's you can do the save, but it saves the information as you're inputting. So as long as you're logged in and you haven't been timed out, you shouldn't have to worry about saving the information. At the bottom of the page where it says save and continue, you do want to hit the save before you leave that particular page. Or the continue button is basically the save button.
Mm-hmm.
Fatima, did that help?
Yes, thank you.
You're welcome. Great question.
I have a question too.
Okay.
Okay, I noticed that this person had a PO box number, and when you look at the page in tax layer, it specifically says street address, And so I always thought that it had to be a street address, but evidently that's not true.
No, it does
That's
not
cool.
have to be a street address.
So that,
Even though it says street address, they really want your mailing address.
oh, okay. And
Well,
so a
because
PO box is acceptable.
yes.
Okay, I never
Especially,
knew that.
yeah, no, especially now where we have more and more individuals who are homeless or near homeless. And so they can get a post office box, or let's say if they're living at the mission or they're in Friendship Home, you know, it's going to be a PO box number to not reveal their address, type of a thing. And so that, and then too, where they're really pushing electronic deposits or debits, the mailing address is not as the street address is not as important probably as it was in prior years.
Okay,
Because in fact, in Lincoln, Nebraska, there will be some apartment complexes. If the name is not on the apartment box, then they don't put the check in their post office box, or you know, their apartment box. They'll send it back to the IRS. So I know it's an off tangent, but that's why the direct deposit is becoming more and more prevalent. So people get their money as quickly as possible.
okay. Thank you.
You're welcome.
That's helpful.
All right. So Miss Anna, other questions, or should Miss Anna continue on? These are great questions, by the way.
So then we finished entering the dividend statement. So now the next form we can enter here is the 1099-R, the railroad benefits or Social Security benefits. So we'll click continue. I just kind of go down how they're listed here. So the first one, it says add or edit a 1099-R. So just kind of to point out, if you have to use the simplified method on the 1099-R, it is out of scope for basic. Make sure that if it needs to use the simplified method, that you either let your site coordinator know or you hand it off to someone who has advanced certification. So then we'll start. If this is a substitute 1099-R, we would click here. The way you would know, where is that box? Does it show somewhere? Well, if it's a substitute one where you have to create it, you would just click here. So then we'll start with putting in the payer ID number. And then it'll populate if it's already an existing company that's been entered at some point in time before. The phone number is optional, so if you'd like to put it in there, you can. Again, it'll populate the taxpayer's mailing information. So if it's different, just go ahead and make the updates. Otherwise, just verify that it's correct. And then you'll put in the gross distribution. So it'd be this first box here into here. Once you click away or you click enter, it'll automatically enter an amount that matches what's on box 1. So if it's different, you would change it. Otherwise, you would keep going. If it doesn't carry to a Form 8880, you would click here. You would click here if you were using the simplified method, but again, I said that is out of scope for basic. If this box is checked, you would click on it. If this box is checked, you would click on that. But those are empty. The only other boxes that are filled are box 4. A lot of the retirement companies or companies that handle retirements are required to withhold a small amount. So there should be something in withholdings. If there's not at all and they're going to continue receiving a distribution from their retirement account, let them know that they should speak with their with the company if they want withholdings to be added or to be withheld. Box 7 is going to let us know what that distribution is for. And this is kind of important to know what it's for, because there might be additional steps that you might have to take regarding that distribution. That is it. There's no state, there's nothing on these ones. So since there's nothing there, we would leave it blank.
And then on this one, since it's distribution code 3, that means it's disability. So there's actually another checkbox in the middle on the bottom that we have to check where it says rollover disability. We do have to check the second box for that one.
Because we have
If
to
it was
report
any other code, you wouldn't check this box other than if it's code G. If it's code G, you would check just the top box.
this one.
If it's code G, check the top box. If it's 3, check the bottom box. If it's any other code, you wouldn't check any of these.
Yeah. The reason that you would put here is because the rollover amount wouldn't be taxable. And then there's nothing here. Some of the 1099Rs might have an amount that is showing in box 15 and 16, but box 14 is empty. So if that's the case, you can just go ahead and leave this blank. Any questions with the 1099R? This will come up. It's just letting you know that it's actually going to ask you if what you entered is correct. And it says the distribution was from a disability pension and you have not reached the minimum retirement age set by your employer. If this is a disability pension, your distribution code should generally be 3. The minimum retirement age might vary from employer to employer. You would not need to check that you would have to check that with your employer. So with distributions for under the age of 59.5, there's an additional 10% penalty. So that's what it's kind of letting you know. And then if it was due to a qualified disaster, you would put yes or no. But if it's a qualified disaster, it would be out of scope, correct, Kyla?
Yeah.
Okay.
Unless it was for COVID, but according to the IRS, COVID doesn't exist anymore.
And then that is for that one. And so then the next form we have is the Social Security benefits form. So that would be here. Notice that if it was on a railroad, it would also be here, but that would be out of scope for basic. So this one's fairly easy. You're just gonna look at what's in box 5. You'll enter the amount. And then if Julie would have had Medicare premiums, it would be listed in box 3. If they had any federal tax withholdings, it would be in box 6, and that would be entered here. If there was a spouse, there would be another little section at the bottom for their information to be added. but this one's fairly simple. If they have multiple parts for the Medicare premiums, as you would enter the total amount. Any questions on this part? No. Okay, so we'll continue. Next on the forms, it seems that they gave us the 1099-G. And this one was for unemployment compensation, so we'll start on here because box 1 is filled out. We'll click unemployment, add or edit a 1099-G. So again, we'll look at this and get it off the form. It'll automatically populate as well, unless it's not been entered prior. Check the address and make sure the form matches. And then we'll enter what we see. It says unemployment compensation, we'll have that. There's 400 in withholdings. And there's no amount for taxable grants.
And I think that's just a glitch in the software right now because I didn't put anything in that box and it went through, so.
I know I was looking at it, I was just reading what it says. And then Nebraska will put in the information. We'll put in state withholding. And then if there happens to be anything here, it would be over here, but there's nothing there either. So we just only enter what we see. And that would be the 1099-G. Next, we have the 1099 miscellaneous. So with the 1099 miscellaneous, as long as it's not associated with like a side hustle or self-employment, it goes on the other income. It used to be that if you had like a side hustle or you were like a non-employee
Non-employee compensation.
yeah, it should be on a 1099 NEC now. So that will look here, that's the line 1099 miscellaneous. We'll click begin, and it's fairly simple. We'll put in the payer's name. So take agency. The address. And the zip code. And then the rest populates. You would click here if it's the payer's social security as the ID. Otherwise, you put in the payer's ID number. I think the practice lab is going to be glitchy for some time, but usually when you enter it once, it doesn't disappear. Okay, so then now we're going to just put what we see here. The other is filled out, so there's that. If there was any federal withholdings, it would be in this box 4. A lot of the times there's no withholdings. Rarely you'll see a withholding, so just keep an eye out for that. If there is any state information on here, then you would put on here and then it'll populate the state piece of it, but it's empty. So you just click continue. And then we go on to the next. This one, Julie did a little bit of gambling. So we would enter this in, where is it?
Under other, it's clear at the bottom.
Yes, down here.
So all these ones in the middle here for us, Schedule C, 1099K, Schedule E, Schedule D, Schedule F, those are all out of scope for basic.
Yes.
So you would not ever enter any of these if you're just basic certified. So that's why we're skipping all the way to the bottom.
And then, so we'll click, did I click on the right one? No, I didn't. So we'll click continue on other income. And then there's one specific for the W2G. If they didn't have a W2G, but they had winnings, it would go under this other income not reported elsewhere. You would click begin, and then I believe we would just put other income, or is there one that says W? No, there's not one specifically that has it, but right here you would just put gambling winnings or winnings, and then you would put in the amount. And then if it's earned income, if it's a different type of income, you would put earned income. So since we do have the form W2G, we'll go ahead and get this entered. So this has the payee's address already in there. We'll put in the payer's ID number. And then the rest of the information will pop up. Since gambling is now legal in Nebraska, there might be some that don't populate because they're new, but this one populated. So then we'll put in the gross winnings, which is what's on this box 1. So we do know that Julie spent 500 at the slots. It's not specific as to that's what she lost, but you can only take a loss up to the 1,000, but that would be if they're itemizing, so that would be out of scope for basic. Correct, Kyla?
Yes.
Okay. I'm like, I
Mhm.
always doubt myself on that one. And then
I mean, you can
there's
still put it in, it just won't calculate anything.
okay. And then it does like to know what type of wager it is. So they do need to know if it was like slots. I don't know what other kind of machines or wagers there are because I do not gamble. But whatever is on there, if they it would be listed on there. So, and then the date they won is what's on box 2. And then there's that. This one does have state withholdings. And again, if the state withholdings, state taxes paid, and state ID number are blank, then there's no state taxes, then we can leave that blank. Or if there's no state taxes at all, or state tax withheld at all, but these other boxes are there, you can leave it blank. So state winnings is 1,000. There's 50. It's being paid to Nebraska. And this would be 54. Okay. And then if we see this, we would fill it out, but since we don't see it, it's empty. We leave the rest empty. There's that for the gambling. And then the very last thing, we don't have this scenario for the basic, but I did want to point out, if the scholarships or grants, which is box 5, is larger than what's on box 1, which is the qualified tuition and related expenses, the difference between them would be considered taxable scholarship income. And that would be under the other compensation, and there's a specific line where it says scholarships and grants not reported on a W-2. I can show you that where that's at, since we'll just go here. So we would go other income, other compensation on this third line here. Scholarships and grants not reported on a W-2 would be here, and then you would just put the difference in here. And I just kind of used the example that we were given with it crossed out so that you can see and visualize what that looks like. And then we'll later talk about the 1098T again as it applies to our scenario. So then now we'll kind of enter into the adjustments to income.
Okay, Anna, before we go, let's take a break.
Okay.
What questions do you folks have? If any, because at this point in time, we might go ahead and take our 10-minute break here.
Okay.
So we don't break in the middle of adjustments. The question came about the software and if it's not doing what it's supposed to be doing. The frustrating thing about Practice Lab between now and when you finish up your certifications, that there is a great deal or a great number of people on the system. Since it is a simulation, it will have some quirkiness and some things might not save. Like Anna had it to where she had to go back in and re-enter information in. We just kind of go with the flow as much as possible. However, out of sight, what will happen is if something quirky is happening with the software, you're going to get what I call the dreaded death cycle, which will be the blue spiral in your screen. And if that happens, or if you're noticing something not working like it's supposed to, immediately notify your site supervisor, because then they will be in contact with TaxSlayer. And so there are having some times where we've had to shut down a site because TaxSlayer is just not working that day. And that typically happens when nationwide we get more and more folks on the system. But last couple of years we haven't had a lot of that happen.
And also they're continuing to make updates when the new forms for 2023 are getting finished by Congress and the IRS and the different states. So they're continuing to add stuff and things like that. So that's why there also could be some glitchiness to it too.
Right, yep, exactly. Okay, so I know the combination of Anna, myself, or Kyla will be on if there are questions, but let's go ahead and take a 10-minute break and let's be back at 10:35 to start adjustments. Thank you, everyone. Great questions.
I was gonna say there is a question. Ethan, my number at the top is very different from.
And I've not answered that one. And I'm gonna, probably the easy question is going to be yes. But if you want to take a look at it for Ethan.
Let's see. Let me check to see if mine's blue. It was for. Okay.
And he said the miscellaneous was the one that wasn't coming in right.
Yeah, I think I may have typed it in wrong. Yeah, I typed it in for a lot more than what it should be.
Oh, that one's the, no, that one's the unemployment.
Oh.
He wants the miscellaneous.
Hold on. Here we go. What is my miscellaneous? Did I type it in right? Yeah. So it would be here. If it's not pulling up, it wouldn't show here.
Mm-hmm.
Ethan, was that helpful? I wonder if you went to take a break. I was gonna say I was gonna pull up the schedule. I don't know if I'm like um
We ran over about 10 minutes on filing status and qualifying dependents, but then you made up for it during the income statement. So we were
Okay.
going to break at 10:30.
okay.
So you're doing fine. Actually,
good.
we're going to be coming back at 10:35 is when we originally had the group schedule,
Okay.
which with us getting into the credits, that's probably a good thing.
I thought I had the schedule open.
It's not like you don't have anything open on your computer at the moment.
All right, I'm gonna take just a really super quick break.
Sounds good.
Yeah, I'm gonna take a really quick super break.
Sounds
Did I
good.
say super late? I'm gonna take a quick break. All right. How is everyone doing? Anna, are you going to be presenting the second half of this morning?
I can, or if Kyla wants to take over, she can as well.
Abby, thank you
Good.
for the thumbs up. That's always a good thing.
I'm
We're
fine
happy.
either way, Anna.
What's that, Kyla?
I was just gonna tell Anna, either way. I'm good with either way. If she wants to keep going, that's fine, and I can just keep chiming in, or I can do it either way.
Um, I can keep going. It's fine.
Okay. All right. Well, folks, hopefully, you're either, how do I want to say this? Hopefully things are working well. If you're in practice lab, I know in some places there might be some hiccups. I do know that Anna during break, her and Kyla did go and look at the federal return, which Anna will show you where that's at. But I do want to also, since she does have this page up where it has a return summary on the right-hand side, and it has the AGI of $37,030 and the federal refund of $7,550. We are far from being done with this return. So try to ignore the refund because it could be super high and then you put a piece of information in and then it crashes. So never give a refund summary update in the middle of a tax return because that will lead to some grief coming down after the quality review process. So Anna, I'm gonna take you away, let you take it away and to show how some of the information has already pulled in or it has pulled into the tax return.
Okay, I'm just gonna go back to where we were so that if someone's not here, they know kind of where to go. So like if you happen to be here on this page, the way you get to that page I was just at where the full 1040 is would be here if you go to the summary and print. So then you go here and then the number should be pulling in so that W2 should be pulled in. There's an amount here that's pulling in. There's another 200 from the dividend statement. There's the taxable interest amount. Let's say there was some interest that was tax exempt, it would show here, but the taxable amount follows over here or flows over here. There's Social Security benefits that are pulling in, and then it's giving you a taxable amount. So that's how you can check to see if things are flowing. Page 3 is where Schedule 1 starts. So this here will show you number 7, which is on unemployment compensation. The gamblings will pull in here. Other income, this is our 1099 miscellaneous, and so then those will pull in on these. So that's how you can tell whether or not some of the forms are pulling through. Or if you kind of forgot to enter a form and you get to this spot, this is kind of where you can look to see. Any questions on this little part right now?
Anna, can you hear me?
Yeah, I can hear you.
Okay, on page 1 on the 1040, my numbers differ just a little bit from yours. I don't have anything entered on line 1E. Did I miss that somewhere?
This line
No,
is,
you haven't missed anything yet. You see, I was looking at that too.
Yes, no, she did. It's from the W2.
Oh,
yes,
from the W2.
yeah.
Sorry.
So
I got it.
I was gonna go to it. So this one, if you missed it, you can click on it here and it'll open up. It should open up the W2 or where it came from. But since that's not working, we're gonna have to do it this way. So we'll click on the federal section. I know that it's from the W2 because when we go into the W2, down here on line 10, there's a dependent care benefits line. And so you should have an amount here. Our W-2 up here has that filled in right here.
Okay, I see that. Yep.
Now,
So-
I'm
And
gonna,
that'll just show for now
yes, thank you.
until
Carol.
we get the daycare expenses put in.
Because we've not completed 2441 yet.
No.
So we'll see, like, if you had already completed Form 2441, that's probably why you're not seeing that $1,000.
So there's that where that came from. So then we'll click continue. And now let me go back to my PowerPoint.
You see, did that answer your question?
Yep, it sure did. I missed that that figure in box 10 on the W-2.
See, that's where your quality reviewer comes into play, right? You know, it's bad. I served with Lucila. She's really good at this. So
Okay, so then the next thing on our we'll go back to the federal section. After we're done with income and we're done entering everything that we see on this page, we'll click continue. And the next thing that will pop up will be the deductions piece. And so then we'll start here in the adjustments. So if we click in here, we'll see the student loan interest piece for it. Where is it at?
I think it's the second from the bottom.
Yeah, it's right here. And as you can see, I've been doing this for quite some time. I still have to read through what some of the lines are and where things are. So if you can't find the form and you've looked a few times, I do want to add that you can type in the form here. And it should pop up some of the forms. So that's helpful too if for whatever reason you're looking at it, your eyes are tired, you can't find the line. You can type in the form and it should pop up. And then here, we just need to put in the amounts. There is a limit of this 2,500. If you, let's say they received like 3,000 and you put in 3,000, the system will calculate the 2,500 for you. So just go ahead and put in the number, or if it's past the max, you can just put in the 2,500. We'll click continue. And then we'll move on to the next slide for the next thing. Let's get out of here. So this one, it's the early withdrawal penalty. We don't have to enter it anywhere else. We would just have to make sure that when we originally entered our interest form over here, and I'll go ahead and open it up again, that we put in the amount that's in box 2. So the system will take care of that if we enter it. Just know that it's an adjustment to income, so this will flow elsewhere on the return. And then we'll see that. On that's additional income. We'll see it flow right here on line 18. Penalty on early withdrawal of savings. So there would be this amount here of $10. And as long as you put it in the first time correctly, it should be there. So then we can move on to the next piece. The next piece, Julie was a teacher, and we saw that on her basic scenario. We saw that her job title was a teacher. We also saw a W-2 that was from LPS. So that would help us also kind of like if they didn't put teacher down, maybe they just put employed on this job title. We can ask, were you a teacher, a student aide, I think counselor. And there's also a line here on supply where on the intake form, it'd be part 5, line 6, which I highlighted on here. And it says, did you buy supplies? And if you're a teacher, teacher's aide, counselor, etc. So you do have to match the hours. And then there's a limit of 300 per educator. So that we'll have to enter in here. So we'll go back to income, or we could just straight away click into deductions. And then we'll click into adjustments. You'll see that the first thing listed here says educator expenses. And then the second line has educator expenses. The same thing goes for here. If they happen to have, so like in her case, she had $450. If you put in the 450, the software will limit it to 300. So you can just put 300 or you can put 450. I'll just put 300 because I don't know if the computer's, I mean, not the computer, the software's glitching or not. So that's that. We'll move on to the next piece. So this part is for the jury duty. So in Julie's case, she was paid 150, but she had a loss in wages of the amount of 200. So the jury duty paid goes under the adjustments, and so that would be down here where it says other adjustments. We'll click begin, and then jury duty pay, we'll put in the 150. For the other piece, which is letting us know that jury duty is taxable. Wait, did I do it backwards?
Yeah, it's you flipped them.
Yeah,
So this should be the 200.
yeah, 200.
So this is so adjustments is the amount of the wage that she lost from having to go to jury duty. That's the amount that goes under the adjustment. But the amount that she actually got paid for going to jury duty, that is included in other income.
Yes. So then we can click continue. So then now we have to go back to the income piece. So you'll go here. And then you can just follow the ones that say here, other income. And then other income not reported elsewhere, we'll hit begin. And here there is a jury duty pay, so you'll just click on that and then you'll put in the amount. She was paid 150 for jury duty. And then you'll click continue. And then we can move on to the next. The next piece we are talking about deductions. Essentially for the basic, the only deduction we are looking at would be the standard deduction. Itemized deductions would be out of scope for the basic certification. But you do just need to know because every once in a while you'll have a tax client that'll ask you about itemizing. And essentially they can itemize as long as their itemized deductions or expenses are higher than the standard deduction. If they happen to have things to itemize, you can quickly look at it and see if it's greater than the standard deduction. If it happens to be higher, then it would have to be passed on to someone with an advanced certification. So you can let your site coordinator know, so they can help you pass it on to someone else. Otherwise, these are the numbers. generally, and these are not including if they're disabled or blind. So then we can move on to the credits. I can show you where it shows up on here really quick. So here the default will be the standard. And right here, line 12 will automatically populate. The next part we're going into are the credits. We'll start off with the non-refundable and then we'll talk about the refundable parts of them. So this is the child tax credit. The child tax credit. With this one, the system will calculate it based on kind of what you've entered on the basic information here. So we'll just kind of click edit for Anne on here. If they weren't a qualifying child for the child tax credit, essentially they wouldn't be on your return. If it was previously disallowed, you just need to include, and I put page, but it should be form. Form 8862. They may or may not know, but it'll reject on our end if they don't know if it was disallowed. So it'll come back with an error letting us know that they need to include that form. Let me see. And then if you don't know whether or not the child is qualifying or not, you would use this. For the child tax credit, remember that the child has to be under the age of 17. So again, this will be done by the software, and it's essentially determining whether or not they're dependent or a qualifying child. The credit for other dependents. So if they're over the age of 17, or in this case, like a student, they do qualify as being an other dependent. So this is what you would use. I believe on here it is going to be, we can see, I think it would be over here. No, it's page 2. There would be amounts here if you see page 19. I can't remember where it pulls up on here. Right here, there would be if there's a credit. Oh, that's for child dependent.
I think it's just on the second page of the 1040.
Is it? Okay. I mean, it's right
Yeah,
here
that's what
in the schedule 8812, but again, the computer will calculate that. Any questions on this one or the child tax credit? No. Okay, so now we're going to get into the fun part. This is something that we do enter on the return. So in our scenario, the tuition in box 1 is greater than what's in box 5, so this qualifies it to be an education credit. Remember that you can add required books and supplies for classes. So remember, John had 200, so that's gonna also calculate into this part. Sometimes you will see where they're kind of neck and neck for the 2 boxes, so you do want to ask if there was books or supplies bought, because that will help break the tie. So then I'll just have this one here open for us to view, because then we have to dictate whether or not they can be eligible for the lifetime learning or the American Opportunity Credit. To kind of help you, you can go look at this chart, the comparison chart, It's in the publication 4012. I forgot to put what page it is, but I believe it is on page J8. So this chart is on page J8. And so looking at John's situation, let's get to this part. We'll go to deductions. And we'll go under the credit section because we do know it's a credit. So we'll go here. And then we'll look at the education credits here. So this is for John, so we'll select John. And so then here we'll look at the form we received because we did receive it. So we'll say yes. Did the student receive the 1098T form for 2022 with box 2 filled? In their case, they didn't because if we go back to our scenario, it's their first year. 2023 was their first year, so it would be no. And then we can click continue. Here we're gonna just put what we see, Southeast. I don't think I mentioned this at the beginning, but when we're filling out any of the forms or we're doing any typing on anything, we use caps just because it's easier to read when we print off everything. It's just a small little detail.
It looks like I forgot to put the address, so just make something up.
Okay, I'm just gonna do. And then 68504. And then we will get that from here. And then we'll click continue. So here, they broke it down into 3 different ones, which is slightly different. Before you would just add the difference. They've added a couple boxes. So for the tuition paid, remember that it's going to be what's on box 1. So there's 4, unless they have a actual printout with the statement that has additional fees that are not included in box 1 that were required by the student to be paid, then you would add onto it. So otherwise, it's just the 4,000. Scholarships or grants, it's 3,500 because that's what's on box 5. And other qualified expenses would be the 200 in books and supplies. And so we'll click continue. And then we'll click continue. And so now it's going to lead us into these, which will help us determine whether or not they're eligible for the American Opportunity Tax Credit. So it's going to ask if the credit has already been claimed for prior 4 years. It's their first year, so it is a no. They're going to ask if it's at least, if the student was at least half time or half time or full time. Here you're going to look at box 8 and you'll say that yes, they were. It's going to ask, did they complete their first 4 years of higher education? You can ask them, maybe they're on their first year of their second bachelor's, you never know. But in our scenario, it's their first year, so the answer would be no. This is very important. With the American Opportunity Credit, you need to know if they have been convicted of a felony drug charge before 2023. In our scenario, that wasn't the case, so we'll click no. And these are all questions that you would ask. And so here it's just going to kind of help you to see which one's the best And it's letting you know the American Opportunity Credit is the best. If you would have said yes on like they did complete their first 4 years, or they, what was the other questions that they completed, anything that would kick them out of the American Opportunity except for the felony, it would either do one or these other ones, and most likely the lifetime learning credit. Any questions on this one? No. I also wanted to add, did I put it here? Oh no, we're gonna talk about the refundable part of this later, so we'll come back to the education credit piece.
I did have a question
Yes,
on, okay, on the tuition form, it
Yes.
said that John had received $3,500 in scholarships. And I know you talked about it, but I missed, where did you enter that?
oh yeah, I can show you again.
Okay, thank you.
So I'm just gonna delete it and then we can go through it again. So we'll answer the questions. We'll say no, you'll enter. I know it's different from what I originally entered, but it's okay. And then do this. We'll continue. And then here is where we would put the amounts. So this is the tuition piece.
Right,
This is where we put the grants.
That it's
And
grants
then-
or scholarships. That's where we put that.
Yeah, grants or
Okay.
scholarships.
that's what threw me because I didn't see the word scholarships.
Yeah.
Okay,
Yeah, it'd be
Okay.
Yes, so it could be grants and or scholarships.
okay, perfect. And then could I ask one other thing?
Yes.
Okay, this goes back to the jury duty.
Mhm.
And she earned $150 for serving
Yeah.
on a jury. And it said that she lost $200 of pay when she did that. And I'm just sitting here thinking that the $200 would have, her W-2 would have been reduced by that $200. Right?
Mhm.
Okay. All right.
Okay.
So Becky, is it, that would be something you could ask, is to say, did you take that with paid or unpaid leave? And if it's unpaid leave, then yeah, then it would reflect on the W-2. Well, either way, it would reflect on the W-2, but I think that's a good question.
Then we'll go on to the next. Okay, so the next one is the child and dependent care credit. So this is one where we do have to do something in our software. So we have to fill out the form. So we'll click begin. It's under the credit section and it's under here. It'll say specifically child and dependent care credit. So we'll click here. They may have a form with like an actual statement, or they may have it written down. In this case, they had it written down. So we'll start with here and we'll enter the information. And then it was for flowers, daycare, and after school. Oh, and then it seems like it's gonna chop us at that. So just enter as much as you can if it's a longer name. maybe we'll just put Flowers Daycare. And then we can enter the address. And then if any of these would apply, you would click on it, but none of those really ever apply. So then you'll click continue. And here, if they have multiple dependents, you can click on who would follow, but in this case, it's only Anne. So the amount that they paid. So this amount is we told that Anne paid 6,000, but then we also have to remember that there was an amount for 1,000 that was on the W-2. So we can't use that amount since it was already taken into account.
I think,
So
I
it
think
didn't
we still
fit.
put in the full 6,000 and I think it automatically backs it out.
I think it does. I'm like, and then we'll continue, I think. And then here it'll tell you, did you receive any dependent care from your employee that is not reported? In this case, it's a no because it is reported. And then it said you're gonna answer whether or not you or your spouse were unable to work to being disabled or enrolled as a full-time student. This is a no for their situation. And then it would ask if you paid any care expenses for 2022 and 2023. We did not. So we'll continue. So then here it takes that employer benefit into account. If they didn't have this on the W-2 part, we would have said no, and we would have to have added it, but it is already in there. And then that takes care of entering the child and dependent care credit. Is there anything I'm forgetting about that?
Any questions on form 2441?
No? Okay. So then this is just a flow chart just in case you need some help trying to figure out whether or not they can claim the child dependent care credit. So it's on page G13. So then the retirement savings credit, we don't really have to do anything with it because in this scenario, it's already on the W-2. So TaxSlayer will automatically do that for us. It would be more so if they did a contribution on the outside of their W-2. For the credit for the elderly and or disabled, you can look at this page on the 104012. And then this is where you would enter it on the 1040, on TaxSlayer. So here it would be under the deductions. You can find it here. And then again, it would be under the credits menu. If this were to apply, it would be right here, credit for the elderly or disabled. And then you would just pick one or the other. If they were older than 65, then I guess you would click here and then that would be that. This does not apply. How old actually does it apply?
No, she's like 40 something.
Okay, because I'm like, I forgot her age. And then this is the additional child tax credit. TaxSlayer will calculate for you again. Just keep in mind that there are some income limitations and there's a little bit of extra information here for that. So that will show up on our summary and print page. For the refundable piece, it shows up right here on line 28 if there's any additional child tax credit. So the other piece would be the earned income credit. So that will also calculate on its own based on what you've entered. So if they're getting earned income credits, it would be on line 27. So there would be an amount here. So that's where you could look to see if they're getting earned income credits. Again, for the earned income credit, if it was previously disallowed, you have to include Form 8862. If they don't know and they did at one point in time have it previously disallowed, it's going to reject, and so then we'll have to contact them. Let's see, and then this is just the earned income credit with a qualifying child. So in our scenario, if you weren't sure and it wasn't calculating, you could look at this to verify. And then the last piece would be the refundable piece of the American Opportunity Credit. So that would be showing here on line 29. Remember that 40% it may be refundable and the rest would be on the non-refundable portion. So it would be up here. I believe it's it would be on here, the education credits line for the non-refundable piece. But again, the software will calculate that. So then now we can move on into the payments.
Anna, if I may, just for a moment, you probably
Yes.
already covered this. Your non-refundable credits will only
Oh yeah.
be as much as your tax liability.
Yes.
So if you're seeing that someone like on the education credits would have the full $1,500, if they're eligible for the full $1,500 of non-refundable credit, but it will only take that full amount if your tax liability is more than 1,500 or 1,500 or more.
Yes.
And it will take from your tax liability how it's listed in the tax and credit section.
Which you can see on our scenario, that's what it's doing. It's taking our tax on line 16, and then it's taking our non-refundable credits, but it's only doing it as much to get it to 0. That's why it says 0 under total tax.
Yes. So
Now with the child independent care expenses at form 2441, will say the taxpayer did not have a federal tax liability. So on line 240, we still want to do the 2441 because state of Nebraska has their own requirements for income limits and tax liability for the 2441. Which is way too much information, so I apologize. So there are forms we still continue to fill out, even though they may not be applicable to the federal. They might be applicable to the state.
yes.
Sorry, Anna. Back to payments.
No, you're fine. I was just making sure we haven't missed anything or if anyone had any other questions. So yes, back to payments. So in our scenario, we were told that Julie made a payment in September. So let me pull up the scenario. Up here. So we are told that Julie made right here. So she decided with her gambling income that she would make an estimated payment in September for $300. So if they know maybe they're gonna keep gambling, they're gonna have a lot of money or something like that, people might make an estimated payment. So we do have to make note of that in our software. So we'll go back to the federal section. And then we can either click on payment and estimates, or depending on where we are, we can always just click continue. And continue. And continue here. So in the slide, I put down where you would follow. So we made it to the payments and estimates, and then there should be this part here where it says federal estimated tax payments. Federal tax payments already made for 2023. So then if she made it, she says she made it in September. So we would put 300 here. And then we would continue. If they anticipate that their income is going to increase and they already kind of know that their withholding isn't going to be enough, there are estimated payments that you can do here. So this one would be vouchers. And so they can either allocate a certain amount so that the vouchers already print with an amount, or they can figure it out at another time, but it's available here. Any questions on the estimated payments?
Anna, we
Um,
take their word for it?
What was it?
Do we take their word for it? Do they have to show us documentation?
If they have documentation, that'll be best, but they may not have it with them, so sometimes we do have to take word from them.
They just
Yeah.
have to note when they sign their return that it's on them, that if they didn't tell us the right thing,
That it's gonna come back.
that it's gonna come back and it'll adjust the amount of the refund that we have on the
Yeah.
tax return.
Yes.
Anna,
It's
I have a
best if
question.
they have, if they
Yeah.
have documentation showing they paid.
Anna, I have a question and it goes back. I just want to make sure I handled it correctly.
Yeah.
On those, on the gambling winnings, in the narrative, it said that she had spent $500, and then the form showed that she had her gross gambling winnings were 1,000. And so she should the $1,000 is reduced by the 500, right?
No. So in that case, let's say they specifically said it was a loss, so I'll just kind of change this for a loss. If it would have been a loss, they can only take the loss of 500 if they're itemizing. So for basic, that is out of scope.
But if she spent that money in order to get the $1,000, doesn't it seem like that should net out?
No, the state's the federal's going to take the full amount. It's only if they have enough to itemize their deductions, can we then go in and then take up to the amount of winnings if that's what they had. So in this case, if she was itemizing, she could have taken her gambling losses at the $500. So it's,
Okay.
yeah, so you can only net it if you're itemizing.
Yes.
Otherwise,
So-
you
I
have,
mean, the thing that's confusing me is, to me, it's not a loss because it's money that she spent to get that $1,000.
right, it's an
Oh.
investment.
But that's, but you're saying that the IRS looks at it as a gambling loss.
Mhm.
Okay,
Right, they're
Okay.
going to look at that W2G. And they're going to look at box one. I think there is, isn't it, Anna?
Yes.
And they're gonna look at box one, and that's what they're going to be looking on at the return. So so they just want to see the full income amount. And most people anymore do not have enough to itemize. So
Right.
we can't subtract out what they paid in to get that the amount of earnings.
Okay, that's good to know. I did not realize that. Okay.
I know, right?
I mean, to me, it just seems like, it just seems like an offset, but I see what you're saying is that's just the way the IRS looks at it, and they're going to match that form.
Yes.
Um, so
Yeah,
yeah, that
and then the taxpayer would receive a letter. So what we're really trying to do is really make sure we're doing a complete and accurate return, because we don't want the stress of the taxpayer receiving a notice, either from
right.
Nebraska or from the Department of Revenue, saying that, hey, we've reduced your refund by X amount because of X, Y, and Z. So,
Right. Okay.
but even if
Yeah.
they do have on, because what box talks about the loss or the how much
Oh, if
money
they
they
had a
wagered.
loss, it is
I was
on
trying to
the
look.
same on the same one where we entered it. So if
Mhm.
we go back
Yeah,
into the thing,
I saw
it
that.
it's
Uh-huh.
right here, but it
Yeah.
won't carry anything because I mean you can literally put
Because she's
$200.
not itemizing.
Yep. It would do nothing.
Okay.
So, and this afternoon, when we get into we'll do a Schedule A, an itemized deduction, then you would see that $200 put into the Schedule
Hmm.
Okay. I appreciate that.
A. In fact, it's probably sitting in the Schedule A. It's just the standard deduction is most advantageous. So we didn't even look at the itemized deductions.
Okay.
Yeah. So if you see here, it's still 1,000. It doesn't change anything.
I see. Okay.
That was a great observation question.
That's, it's just one of those things that doesn't.
Becky, are we going to see you advocating that we need to reduce our winnings by how much we wagered?
Well, I guess the thing is that there's no proof of how much they spent to get that. So I can kind of see why the IRS doesn't, yeah, because
Mhm.
nobody would ever have any reportable winnings, right? Because they they wouldn't have to prove anything. So yeah, that's not going to work. So
I
Yeah.
have seen one individual that probably winnings were greater than what they had invested, or right. But I've only seen one person that said that the winnings were greater than what they wagered. Because you're right, typically people are putting more money in the slots or at the table than what they're getting back in the casino. All right, Anna, sorry about that. I got us off track.
No, you're fine. So then the last piece is just kind of talking about the federal withholding. This is kind of in this scenario with Julie, it would kind of be a little bit more of a conversation if she, let's say, was going to continue gambling and she was going to make an extravagant amount of money off of gambling. You would probably want to have her know that they only take like 10% or nothing at all to make sure that when that is issued, the W-2G is issued or her winnings are issued, that they take withholding. But in this case, it would really only affect her once the child, her youngest child, turns over the age of 17, because the additional child tax credit won't be there. And that's a huge amount. And so a lot of the times with families, when they're in that when their child enters over the 17 age, that's when they sometimes see a little bit of a amount they owe. So in order for them to avoid that, if they don't want to pay back at the time of filing, they can redo the W-4 form, or if there's other like a W-2G or a 1099-R, have the withholdings on those adjusted accordingly. or have them take out a little bit more. And I think we've made it to the end of entering everything on our tax return. So is
Sure.
there any
Oh, Anna, why don't you go back to your slide about take a deep breath, because I think we've given a lot of information and we've really moved quickly through some things.
Yes.
So I think it's always to remember Anna's advice of, you know, don't panic, take a breath, and just remember it's one document at a time, and that you're solely not responsible for that tax return. At this point in time, you would ask for a quality review. So another person certified at the same level or higher would review the documentation, the intake interview and quality review sheets. They would go through all of that. And then as Tyler was mentioning, once we have everything correctly and accurately entered in the return and we print everything off for the taxpayer and we go through the return, then they sign the signature sheet, which is form 8879. And as Kyla mentioned earlier, that's putting all the responsibility of that tax return back on to the taxpayer. And as long as you as a tax preparer are doing the things that are within the scope of your certification, you are protected by the Volunteer Protection Act of 1974. So I just want to make you know that there are some protections that for you volunteering your services in preparation of clients' tax returns. So Anna, we do have a little bit of time, and not to keep us here, but Anna, let's say that we have, it's been quality reviewed, and you've printed out the tax return, and you're presenting the tax return to the client, and they've been there this entire time, and you've been having this ongoing conversation about all of these things. Can you walk us through the tax return like you would walk it through with the tax preparer?
Yes. So
Or
I'm
the
just gonna,
taxpayer?
yeah, I can do that.
And then do you want to make that your sole screen and make it a little bit larger?
Yeah.
Thank you, ma'am.
So I'm just gonna pull up what they're gonna see. So some of these pages won't print off because we do have very specific site print sets that we have. But I can show you. So they will see this because at some point in time during the quality review, you'll have them double check their basic information. So everything that's here, make sure that's correct. If they elected for direct deposit, and you made it all the way to the end, it'll print off on the basic information page as well. So you'll have them double check their routing and account number. But what Dr. Moody wants me to do is go as if we finished it, it's been quality reviewed. So I always like to show them that the software may print off a electronic version of the W-2. So those will be there. Any of the forms we've entered, it'll print off. So those will be there. It'll possibly print with a print set. So then we'll go down. I always save this to the last one. So I always pull them out onto the side. So we'll skip that because we'll come back to it. So this is the form 1040. And I'm just gonna go as if you guys were the client. So like if I dumb it down a lot, that's because that's how I do it, because not everyone understands taxes. So right here in this first part is just their basic information. I always have them double check their home address again, especially if they elected to have a check mailed, because this is where it'll be sent. I again let them know what the filing status is. So in Julie's case, she elected for head of household because she had qualifying children. Her children here will let you know if they were if they got the child tax credit or the credit for other dependent. She had income from her W-2, so that's where this is coming from. There was other income, other earned income, so that pulled up here. And so now line 1Z, is all of these added. We had interest come through, we had ordinary dividends come through, and then there's Social Security benefits that were taxable. There was capital gains here on this line as well. And so all of that is going to be added up, and then it's going to give us this number here that we see for the total income. Deduction. And the standard deduction will reduce the amount of income. So then we come up with our taxable income. So that's the number we see on line 15. Our taxable income is going to be used to calculate our tax liability. And then we were eligible for the child tax credit or credit for other dependents. So that's going to help reduce the tax liability or tax payment. And then there was other credits we were eligible for. So there's going to be pulling in here. And so then our total amount that we can adjust or reduce our tax liability by will be shown on line 21. So our total tax is 0. Here we'll see the withholdings that was based on the W-2, the 1099 or other forms. So it's going to add those up for us. And then it's also going to take into consideration the estimated payments that were applied in 2022. And then here we're going to see the earned income, the additional child tax credit, American Opportunity Credit. And because we have a total tax of 0, we are going to see this entire amount here as a refund. And that is what we're getting as a refund because essentially we overpaid. And then if they would have a banking or account information, I would have them double check again. And then you have them sign. And then I just point out that there's the different schedules that will identify some of like the jury duty pay, stuff like that. Did Nebraska pull up here?
I don't think so. I don't think Nebraska is in right now.
Yeah, I don't think it did. Okay. So then I would take them back to then our signature page and let them know that if they're comfortable with everything that we've entered with the numbers, then they can go ahead and sign off, and that's giving us consent to e-file on their behalf, and that it also treats it as a self-prepared return. So at the end of the day, they are responsible for the information. And then they sign or they don't sign, depending on your tax client. And then you give them copies of their return and off they go.
Yep, so you keep one of the signed copies of the 8879 that's put in with the intake interview and quality review sheets. Anything that has federal withholding on it, you keep a copy of it. You make a photocopy of it. I mean, this is stuff we're going to go over later, but I also just want to mention that even though they signed Form 8879, if they do get a letter from the Internal Revenue Service or the Department of Revenue, we still encourage them to come see us.
Yeah.
So we do provide some after-tax return support.
Yes. And I just had this page 3 of the intake form pulled up. So let's say they don't finish or there's something missing. Maybe the spouse, it's supposed to be a joint return and the spouse isn't there. So maybe you can add like a comment here letting us know why it wasn't finished or why it's incomplete and we can't e-file. And then maybe they're going to come back that same day or they come back another day, but you could use